Thank you for joining Noble Capital Markets Emerging Growth Virtual Equity Conference. I am Mark Reichman, a Senior Research Analyst at Noble. It is my pleasure to introduce Ms. Irina Aksenova, Vice President, Investor Relations of Sigma Lithium Corp. Sigma Lithium is a leading global lithium producer dedicated to powering the next generation of electric vehicle batteries with carbon neutral, socially and environmentally sustainable chemical-grade lithium concentrate. The company stock is listed on the NASDAQ under the symbol SGML, the TSX Venture Exchange under the symbol SGML, and the B3 Exchange under the symbol S2GM34. Irina, the floor is yours.
Thank you, Mark, and thank you everyone for joining. It's a pleasure to be here, and I really appreciate the opportunity to present Sigma Lithium to you. As Mark said, I'll go for like a couple of big picture slides, and then we can dive into more questions about the company. So Sigma Lithium is one of the probably largest at this point lithium producers. We produce lithium spodumene concentrate out of our 100% owned lithium deposit located in Brazil, in Minas Gerais. We own probably one of the largest hard rock lithium deposits in the world, and we've been in commercial production for over 2 years now, currently running at approximately 270,000 tons of lithium spodumene concentrate capacity annually, which translates to approximately 40,000 tons of lithium carbonate equivalent per year. Our recent financial information for the last 12 months, our revenues reach over $160 million. Like the first quarter 2025, revenues were close to $50 million. We're producing approximately, as I mentioned, at the capacity of 270,000 tons. But first quarter, we produced over 68,000 tons. That's averaging over 273,000 tons annually. And our target for 2025 is to reach at least 270,000 tons of production capacity. That's the spodumene equivalent. We also reported over $11 million in EBITDA for the first quarter 2025. That represents approximately 25% EBITDA margin. And our cash gross margin, that's excluding D&A expenses, is approximately 35% for the same first quarter of 2025. I would like to touch a little bit on the deposit itself because it is important for mining companies. We believe we are probably number 5 or like the 5th largest producing mineral complex globally. Speaking about the hard rock deposit, because as you know, lithium is produced currently mainly from 2 sources. One is liquid, which is brine, and another one is a hard rock, which is either spodumene, lepidolite, clay, or other sources, mainly spodumene. Spodumene production is mainly based in Australia and in Brazil. Also, there's some deposits in Africa and a little bit in China, but these are like the major jurisdictions. So the deposit that we own, based on our recent technical report, which is NI 43-101 report produced according with Canadian mining regulations, we've confirmed over 100 million tons of resources and approximately 76 million tons of reserves. That gives that project a life of almost 60 years running it at one plant, what we have currently, like this one capacity. But we're at the moment doubling that capacity. So running 2 plants, we have a visibility of over 20 years for the project, which we believe is good enough. But obviously, as we continue depleting the reserves, we'll be continue work on converting resources into reserves and continue with all the drilling and exploration process in our property to ensure that we always have a good life mine for the project. So speaking of the capacity, we are working on a phase 2 project at the moment, which will essentially add another DMS plant. So the way Sigma operates, we have a mining operation in Brazil, obviously. Next to that, we have an industrial complex, which is a DMS plant, dense media separation technology, where we concentrate the ore, which we mine, into spodumene concentrate of approximately 5.5%. So the phase two capex is extremely low compared to peers in the lithium industry is about $400 a ton of installed capacity, or 100 million total. And that capex is going to be financed by the Brazilian government through a reimbursement structure type of loan provided by Brazilian Bank of Development. So we are not deploying any of our own cash produced from the operations into the capex of the second phase of our industrial complex. Another important kind of story of Sigma, we believe we're one of the lowest cost producers, hard rock producers of lithium globally. We're probably second to Greenbushes only. And as you can see at the bottom right, as you look at the screen corner, that this is our cost on a CIF basis. This is the cash cost of the product delivered to China. This is how much it cost us. If you look at the first quarter, is under $460 a ton. That's all in delivered to China, and all in sustaining cost, which includes everything except taxes, like everything, SG&A, financial costs, delivery costs, everything is just a touch above of $620 for the first quarter 2025. And the goal for the year to maintain it within like $660 a ton, which is a very, very competitive position compared to the rest of the players in the industry. And this is just a little bit overview of what Sigma is and the operations. So we run a mining site with two pits, north and south. It's one mine. We went for the two pits to preserve the natural creek of water, which runs between the pits. It was a great idea in the hindsight. So we did that. It's a little bit probably more challenging, I would say more interesting to run two pits. It gives certain advantages to your operations, but that's where we are. And we have obviously on the right side, you can see the DMS plant, which is industrial complex, which does the concentration of the ore into the spodumene concentrate. Another important fact about Sigma, we are very, very ESG, or I would say more like a sustainability focused company. We're really a new company, and when even prior to commencing the production, the sustainability was a key focus of the company. We operate in Brazil. In Brazil, mining industry, unfortunately, has had quite a bit of negative reputation, especially when it comes to tailing dams. So when we developed the project, the idea was, well, we are not going to produce with tailing dams. So we don't do tailing dams. We have a dry stacking. We specifically designed a dry stacking model for our DMS plant. So all of our tails are dry stacked. And we also do quite a lot of recycling of our tailings. We don't use any hazardous or toxic chemicals in the process. We use very clean electricity coming from hydro. Brazil is a great country in that sense. The majority of electricity is produced using hydro stations. So there's no like CO2 emission coming from energy sources. And it's a very low carbon intensity operation in general. And we don't use any potable water. The water that we have at our process, we take it from the nearby river, which is unfortunately not potable. So we have to clean it and purify, and we recycle the vast majority of this water in the process. Hence, like we call it a quintuple zero lithium, because of all the kind of zero impacts and on different like ESG KPIs that we monitor. And again, we're based in Brazil. Brazil is a great mining jurisdiction. The country is huge, but we are very close located to the port compared to the rest of the country, compared to other jurisdictions globally. The freight logistics, it's very well established because we're in Minas Gerais. Minas Gerais it's literally translated as a mining state of Brazil. The largest iron ore company is located there. The majority of mining operations in Brazil are located in the state. So the state is very well positioned to support mining industry, mining and industrial both. And there's lots of infrastructure like power, transmission lines, roads to the port, the abundance of water, massive like an iron ore port from where we also ship our product. And the whole infrastructure is there to support the business, from like contracting companies to transporting companies. And it's the most important part, it's very, very low cost. So Brazil is still an emerging economy, and in general, cost of operations is low in Brazil. Looking at Sigma itself, if we look at the ownership structure, so approximately close to 60% of the company is owned by Brazilian investors, and within that, approximately 40% is a controlling shareholder, which is an A10 private equity fund, which was behind like the founder of the company and behind the whole project development of the company. And they've been around since 2016 and still remain a majority shareholder. And at the board, we have a quite diverse board. We have board members both from Brazil, from Canada, from the UK, but based in the Middle East, with 3 board members being independent. And if you look at like a little bit of a summary of the key competitive advantage that we have, when we look at Sigma, we're thinking about a large-scale project, large-scale operation that can be scaled up with low cost, and we're fully traceable. So we're in the jurisdictions with absolutely clear mining regulations, environmental regulations, labor regulations. The safety is the #1 priority that we have at the company, as well as sustainability. So we produce product which is fully traceable from the origin to the moment it gets to the customer. Again, established jurisdictions in Brazil with strong rule of law. We have a low-cost position, which allows us to be resilient to lithium market price cycles. At the moment, we are, I believe, at the bottom of the price cycle. And with the cost position, we feel relatively comfortable to survive that, to go through that bottom cycle. With very efficient operations, so we achieve almost 70% recovery levels at the DMS without using flotation compared to like other DMS operations in the world. And if you look at the global recovery for the whole process from mine to gate, it's over 60%. Again, safety is really important. We've been operating for over 700 days without any accidents. We've lost time. And what I mentioned earlier, we've been rewarded with a highly subsidized, low-cost financing, I would say, vehicle to pay for our capex for the phase 2 development. And it's mainly due to obviously us being a like industrial pioneer or industrial champion in the country, as they're called, but also the impact and the hard work that we've done on the social aspects with the community surrounding our operations. And that's been recognized at the government level, both regional and federal, and hence the support provided from the government, which we truly appreciate. And another important fact about Sigma, especially in the current environment, and we probably can talk about that later, is that we don't have any offtake agreements or any prepayment agreements. So we don't have any single unit of our production being committed to somebody else. And that's an amazing asset to have, especially again, when we go from the bottom cycle of the lithium prices. Just a touch about cost, and it's really important when it comes to Sigma. We do believe we're probably second only to Greenbushes. Greenbushes is perceived to be one of the biggest and one of the most, or probably one of the best hard rock deposits in the world. But Greenbushes has completely different scale compared to us. We do believe with scale, we can get even closer to that cost level. But still, it's a very comfortable position where we are compared to the rest of the industry. I've talked about the safety, and it's paramount. It's really important to us. We do believe like we have a huge responsibility for our employees, and we employ people from the region. So we run the whole huge homecoming program in the region, where we bring people back to the communities. We train and employ people, and we make sure they go home safely. Just a little bit on the operations and the productions. I mentioned about the capacity that we produced approximately 240,000 tons during the 2024. And our goal for 2025 is to reach 270,000 tons of production. And a little bit on offtakes. So the reason, as I mentioned, we own all of our products, and that has a potential to unlock quite a significant value because we can sign easily several prepayment offtake agreements, which will allow us to obviously raise financing at a lower cost and navigate through the lower cycle, and also finance or help finance the development of a second plant. I mean, we've touched about the cost, but again, we're really proud of that. There's a lot of cost information, and it is really important because when you look at the mining operations, especially in a commodity, and lithium, like spodumene, it is a commodity. The most important factor about the commodity business is to make sure that you can survive and weather all the bottom cycles which happen in the commodity markets. And we believe we have this position to do that. We have this resilience because our cost is low, and we keep working towards bringing the cost further down. During the 2025, we have some initiatives on the mine side to get more efficiency out of that. When it comes to plant, we always keep running plant with, looking for tweaks here and there on how we can improve efficiency and how we can further decrease our cost. And what I mentioned an all-in, because it's also very important. There's a lots of different way of how people calculate all-in sustaining costs. As I mentioned earlier, we include everything except taxes. So it's pretty much everything we have to pay for, excluding taxes. And that's a very comfortable position. And as we go with expansion, as we scale the production, the cost can go down significantly, just because of not even touching like production costs that much, but just reducing like SG&A and financial expenses with scale. And that's kind of sums up what Sigma Lithium is at the moment. And I'm happy to take any questions.
Well, thank you, Irina, for the insightful presentation. I guess the first question is would you just discuss the progress and the key milestones related to the phase 2 expansion?
Right. So what we've done at the moment, basically, phase 2 expansion is a second industrial plant, which is exactly a copy of the current plant that we're running. We believe it's the best flow sheet that we can have at the moment, and we're replicating it. And it's a very straightforward construction. So we're not doing anything on the mine. We just need to build the ground to put the plant on, bring all of the equipment, let it be delivered to the site, and assembly the plant. At the moment, we're completing civil work. So it's a long process because we need to prepare. It rains a lot in Brazil, so the whole drainage system is really important. So we need to prepare the surface to the plant to be installed. And we are about to start ordering equipment. So we still believe we can get around by the end of this year, we should be ready to start commissioning the plant. So we hopefully can get this double capacity or double volume coming up in 2026. And again, it's like a very straightforward construction. Shouldn't be any surprises. We're not taking any risk with a different mine or different ore. It's the same process, just the second line. And we have the most importantly is we have the whole infrastructure already built. Because when we developed project, it was like end of 2022. It was like a crazy cycle for lithium. So we were thinking, right, we're going to build just line 1, 2, 3, like one by one immediately. Well, then, price changed. So priorities and reality kind of changed as well. So we paused a little bit in the growth stage, but nevertheless, we build the infrastructure. So like electricity, water treatment, like all the facilities are built to support 3 lines. So we don't need to build any of those, just bring the plant, assembly it, and it's ready to go.
Now, at what point would you expect to tie a portion of the company's production to offtake agreements?
We're actually actively involved in discussion at this moment. Why? I think there's a lot of demand. There's definitely demand coming from customers, from traders, from OEMs, from like different parties in the market, because when it's like a bottom cycle in the commodity space, people, those who believe in the growth, and we all know lithium demand will continue to grow at like crazy rates. So people want to ensure that there is a supply for the coming years. And I think also with dynamics at the moment that lithium market is very concentrated in China. So there are quite a lot of players want to ensure they have access to supply outside of China too. And Sigma plays into this role. And also we are resilient producer, we're low cost. So there's a certain level of guarantee that we will survive the bottom cycle, we'll continue into the story, we'll continue to produce and develop, and we're growing. So the customers want to ensure that they have this supply in the coming years. And because the prices are low, so the prepayment aspect of offtake is not as, as crazy or as high as would have been in a, on the upper kind of curve of the cycle, the price cycle. And for us, it's also low risk because whatever volume we commit, there's no kind of downside risk where we'll have to commit more volume if the price goes down, because price is objectively the price is at the bottom at the moment.
Well, you mentioned receipt of the $100 million of government subsidized debt, and I was just wondering, what has your experience been working in Brazil?
I mean, the debt, just want to kind of clarify, it's a reimbursement structure, right? So we have to spend, and then we have to bring invoices, and we get reimbursed. So that's how it works. So they don't put money
Right,
upfront
okay.
to us. That's why we're talking about the prepayment agreement to make sure we have a little bit more comfortable, like liquidity position where we can bridge that financing. Brazil, I would say Brazil has been Brazil is a great jurisdiction. It's great jurisdiction for for many reasons, but for mining specifically, it's still a very low cost jurisdiction, from energy to labor, and there's a lot of labor because it's a mining kind of state where we are. So you do have qualified labor, and there's a lot of labor. It's a big country with a huge population, but also we are located in the area which is probably one of the poorest in the region, because it's not the area where you can do lots of agriculture. It's quite dry. So people, communities, they have to like go out somewhere to find jobs. And that's why we've been trying to bring them back. So they stay within community, they care about the community, and they have the economic resources to continue living within community and us providing jobs. And that's being recognized by the government, by the regional government, the federal government, because we bring economic development to the region. We bring jobs. I mean, we employ like 1,500 people directly, indirectly, and that is people from the region. I would say like close to 90% of our employees are from the communities around the operations. So it's really important, and the government recognizes it. The government provides quite a lot of support, from financing to like tax incentives, and in general like support and cheerleading for somebody who is doing an impactful work in the region.
Now, one of the slides, summarized those all-in sustaining costs during the first quarter compared to targets, which, you were below, and we're seeing, expecting improvement in 25, 26 and beyond. So what are the drivers for improvement beyond just increased scale and associated economies of scale?
But scale definitely helps. Scale helps initially to reduce, obviously, to dilute some fixed costs on the mining or like industrial part of operations, but also just half SG&A and financial expenses. That's like a straightforward, because we're not growing any SG&A expenses as we have two plants, and obviously financing, we are going to replace financing with cheap financing from, or subsidized financing from the government. That will also help to bring the costs down. But then we do have quite a lot of initiatives. So like a previous year, we've been focusing a lot on the plant. We've introduced some like reprocessing circuits, so we can reprocess tailings like a hyperfines or ultrafines, like well, usually we're considered like a tailing of the operation, but we reprocess it, and by doing that, we increase volume and we increase recovery. And we're doing like lots of small bits and pieces at the plant constantly to make sure we keep recovery growing, even a little bit, but even a little bit matters when it comes to cost or efficiency. And this year we're diving deeper into mining operations. There's a lot of like what we've been doing recently. We're down at the plant and we're doing it at the mine. Since we've been operating for 2 years, we've accumulated quite a large amount of data. And there's so many tools now that help you to analyze this data and to make sure that to find the efficiency or like way of how you can increase efficiency, how can you improve the linearness of your operation, and by doing that, reduce cost further. So that's what we're going to plan to do throughout the 2025. And we believe we'll can get some like we can get even leaner in the cost on our mining operations too. But these are main addition like efficiencies. But then as we produce, for example, when we just started producing and selling, like freight was really expensive, transportation cost was really expensive. That has come down significantly for the 2 years because as you grow your capacity, your volume, you can branch out and get one transporter, transporting company, another transporting company, another transporting company, and then you have more competition. Obviously, everything will bring costs down, and freight in general has come down, but also we're trying to ship a bigger boat. So like learning how to make it, or we've learned, how you can be more efficient here as well. So small like initiatives like this, but they do help to bring costs down.
We have time for one more question, and that is, how has the company institutionalized or enshrined its safety and ESG practices? And I know that may encompass a variety of company initiatives.
Yes, but safety, I think the safety that we work, it's obviously it's training, constant training, but also we've established a culture in the company that people can speak up and people are encouraged to speak up at all levels. So it's not like you see something, say something. If you're seeing something that it shouldn't be that way, bring it up or bring it to your colleague or bring it to management and to all levels of management. So we have this very open, outspoken culture in the company that employees feel very important and feel that it's their duty and their responsibility to bring whatever issues they're seeing and bring it up to the management and make sure they are resolved. So this is kind of one of the importance, I think, like, or the key foundation for kind of establishing this safety culture where everybody is responsible for the worker next to you. So you're responsible for your colleague and colleague is responsible for you. Hence, you speak up if something is not how it should be. And training, like constant training, make sure the employees know what they do. We have like almost daily, like on-site meetings that kind of the whole safety is being drilled into the head and all the procedures and how you do it and so on. And on ESG, again, I said, we're new mining company, right? We don't have that legacy of the way things were done 50, 100 years ago. That helps because you start from a clean slate. And we started like from the very beginning, we want to make impact. We want to create some legacy after we've done or left in whatever, how many years, that there's something that says, it had meaning, our existence had meaning, we've made impact. And impact predominantly, obviously, is economic and social on the communities around us. So we bring people out of poverty, we improve their quality of life. And I think that's kind of the major goal for the company to exist and to do the way what we do so we can pay it back to the country and to the community around us.
Irina, this has been a very informative discussion, and we thank you so much for joining us.
Thank you, Mark, and thank you everybody for joining and for tuning in.